The other socials. Going live on Facebook. We
Super.
are live on YouTube, so we're all set, brother. How you doing?
I'm doing, as my grandpappy would say, when he brought home all F's to his father for school, and he said, "What is all this F's?" And he said, "Fine, Daddy, fine." That's how I'm doing.
Good, man.
Fine, Daddy, fine.
I feel the same way. It's been a crazy weekend
Yeah.
with everything happening around these banks, and I just want to start off by saying that on this channel and then on our personal Twitter accounts, neither Ted nor I is advocating bank runs. This is scary stuff, and we don't want to see that. Hopefully, the measures taken by the federal government over the weekend were enough to stop any sort of potential run on banks. I'm not moving money out of my bank. I'm not doing anything different because of any of this. And I just want to make that very clear to anybody that's listening that, the last thing you want is for the financial system in the United States to fall apart. That's not what we're aiming for here. That being said, there's a lot of silly things happening in these markets and by these banks and by the Fed that has led to some of the actions and behaviors that have found these individuals and banks in positions where they are no longer solvent. And that is a legitimate concern. It's why we talk about counterparty risk and being able to hedge some of that counterparty risk in an asset like Bitcoin and crypto for that matter. That's why we believe in it. And over the weekend, we got proven right that these concerns aren't just a bunch of Bitcoin and crypto people going crazy over nothing, right? There are legitimate concerns and fears that exist within the system that people need to be made aware of. And this isn't crypto's fault, right? So what you're seeing right now is this effort by the media and the government to isolate these three banks that were involved with crypto, but not involved in the sense that they were buying and holding crypto. They were servicing loans to companies and cryptos that were trying to build business, right? And so what we're talking about there is on and off ramps to digital currency from fiat, the traditional fiat systems, and it certainly seems like that's being pinched. Whether it's on purpose or not is up for debate, but it's interesting to watch it play out. Ted, do you have any thoughts on that?
I do. So there are a lot of things that we don't have any control over as individuals, like individual participants in at the individual or at the lower, not lower, at the base level of our economy in our country, in the U.S., for example. There's a lot of things we don't have any control over, and one of them is when you put your money into a bank, you don't have a lot of control what they do with it. And we don't even, most of us don't even know what the law is, what the federal regulations are, like all of the different consumer protections that have been legislated into existence. Most of us don't know what any of those things are. What we have is trust in the system. And to your point earlier about not feeling pinched by this personally, and the thing I'm trying to spit out here is that the big issue here is that most of the banking apparatus in this country, they're financially sound, they're solvent, they've followed all of the rules and regulations to be able to operate legally in the U.S. And they're much better run businesses than some other banking institutions are. And where I'm like ultimately headed with with this particular point is that even with all those things in place, there's still some things we don't have any control over as individuals. And one of the reasons that we like Bitcoin, for example, is that it can be a protective hedge in some kind, or that's one way to think about it, is that the money that we've taken and traded to hold Bitcoin instead is something that we 100% have control over. So it's the other end of the spectrum. There's a lot of things we don't have control over in the world. None of us are going to influence federal monetary policy, Very few of us have any real influence on fiscal policy, meaning like we vote for our local governments and our state governments, and then for the president and all of the people that make up Congress, all our politicians that are supposed to represent us nationally. We vote, but still at the individual level, you can vote one way, and then the rest of the state or district can vote the other way, and that's life. But what I'm trying to say is that what we do have control over, or the things that we do have control over are, for example, being able to buy Bitcoin and hold it in cold storage and know that I possess it. I possess the controls, and no one can take it from me and loan it out, gamble with it, spend it on something, and tell me that everything is fine. And I'm not saying this as a critique of the system. I'm saying that unfortunately, there are plenty of well-documented cases, and there are circumstances where, as we just saw, there people put their cash, their U.S. dollars, in a particular financial institution. That financial institution updated the balance on the screen, so to speak, and then took that money and made other types of investments with it, and they didn't work out, and they effectively lost that money. Am I wrong in articulating it that way?
In the case of Silicon Valley Bank, my understanding of what they did is they were duped into buying these treasury bonds, at the hest of the Federal Reserve, right? And they bought them at rates that were lower than what they are today, okay? And so part of the problem with Silicon Valley Bank is that they didn't hedge any of these. Now, you could argue that it wouldn't have mattered anyway, but essentially what happened is they bought treasuries and rates went up so fast that the treasuries are now worth 70 to 80 cents on the dollar. The bank is insolvent, okay? It was interesting to see that play out, but essentially what you just said, right? And I'm not an expert on any of that, so it's just my general understanding is the reason Silicon Valley Bank went bust is because they made a bad investment in certain treasuries, right? And, say what you will about it, the federal government had stepped in and they guaranteed the deposits of all the people in the bank, which is a huge bank. It's a lot of startups. It's a lot of companies that, really are the backbone of the United States GDP, right? Like this bank was huge. And for the government to step in like they did, I think was the right decision. I don't know that I agree with the system in its totality. But again, that's why as an individual, I've made a decision to eliminate some of that counterparty risk. And, most of your banks, they're not going to be taking silly bets like this. But again, we can talk back and forth about, what crypto's role in this is. But at the end of the day, it's just like FTX. These aren't crypto-specific problems. This is a traditional system problem, right? That just happened to bank crypto clients. And when you talk about something else that happened over the weekend is they seized Signature Bank, okay? And Signature Bank was another bank that was, lending to crypto companies. And, I've got a tweet pulled up from Nick Carter, and basically he says, dear God, Barney Frank openly admits that Signature Bank was artificially shuttered despite no insolvency because regulators wanted to kill off the last major pro-crypto bank. Now, that's interesting, right? Because you're seeing this bank, Signature Bank, that apparently was solvent, but for some reason that is still a mystery to me, and I'm sure a lot of others, was seized as well. Do you have any thoughts there?
Yeah, I don't understand. I don't like. First of all, let's make sure everybody understands who the Frank is here, and he is of the Dodd-Frank fame. So if you're not familiar with Dodd-Frank, hop on the old internet and do some digging on what Dodd-Frank is, and know that the Frank that we're talking about here is Barney Frank, and Barney Frank is on the board of Signature Bank, and is telling us the things that you just articulated, that they were not insolvent, but they were still seized and shut down by the government. Am I saying it back correctly?
That's correct, and that's what everybody's kind of scratching their head, and they're kind of going, okay, well, if you're paying attention to this and you're in it every day, every hour, like you and I are, this is something that we notice and we go, okay, that's weird. Can we get some answers there? But the normal everyday person turns on the TV and what they see is, oh, these crypto banks failed. Well, come on, that's entirely disingenuous. Like these aren't, they didn't fail because they were servicing crypto companies. They failed because they were ran like shit. Like that's the reason. Like, and while the government isn't inherently bailing out the bank or its equity holders, the people that have deposits in there are backstopped. And essentially what this does, my understanding, is it puts an end to quantitative tightening, because they basically announced a fund. To what they're going to do is they're going to backstop all deposits. Is that right? I don't know if that's right or not.
Yep.
But that,
it's, as far as I know, that is correct. So the one, like, I have a really great friendship that I've developed over the last year with the UPS guy out here in the sticks, and he called me today. So this is a great example of like when I worked at the hedge fund. Quick side note, tangent. I was the wettest behind the ears, and I represented retail customers who were purchasing or trying to speculate in markets. And I know for a fact, because the big boss told me, is that initially, before I was really like spun up and understanding, by the time I found something as a retail, like the outlets that I have of information, by the time I was bringing that stuff back to the table, they would use that to take the opposite side of what the retail trade would be. Like, meaning if some stock was going really, really high and got a bunch of retail interest, they would then short the stock, okay, because that retail interest would die very quickly, and people would panic and they would dump their shares and they would profit from that. So that's to give you context. Like what we have is, what I'm experiencing now is a situation where I've been in markets for almost 10 years, and I'm getting a guy that I like off the street, a retail guy, calling me saying, "What happened?" So I was trying to, and he asked about like what's going to happen with interest rates, and now to the point of what you're talking about, like this what's now the end of QT, or quantitative tightening, which is what the Federal Reserve started to do by starting to ratchet up the Fed funds rate, basically increasing the cost of borrowing and creating a situation where it makes more sense to just keep the cash that you have rather than speculate or make investments with it, because the rate of return is going to be higher when the interest rate is higher. It's allegedly it's risk-free when you take $1 million and put it in a 5% savings account versus taking $1 million and speculating it in the stock market, where you could maybe make 80% on one and lose 100% on another. It's a way to also, by raising the interest rate, it also puts downward price pressure on people selling things, because the availability of cash or money in the system is allegedly going to be less. So that should incentivize companies to either like innovate and do better and make better products that people are willing to spend more money on, or cut prices. So it's a way to try and achieve price stability. Somebody scream and yell if I got this wrong, but anyway, the point I'm trying to get to is this: what had been happening the last year, which kind of triggered all this madness in the banks, is the interest rate has gone up, and that's tightening, making conditions tighter, meaning it costs more to borrow. And now, by opening this backstop, this facility that it gives all banks, not just the ones that are affected, but it gives all banks the ability to go to the Federal Reserve at the end of the day and say, we can't meet our financial obligations to depositors because we're a fractionally reserved operation, and we don't. All of a sudden, all these people have come out of the woodwork asking for their deposits back. Well, we don't have them here. Let's take some money from the Fed, put it into our bank, and then make our depositors whole. And that window, that supply of money, it has to come from somewhere. And what does the Federal Reserve do? It literally manufactures dollars electronically. They punch a few keys. So what they've done, and you can get on YouTube or Google or any place else that you want and look for videos of Fed Chair Powell and any of the Fed governors talking about how money comes into existence nowadays. And they will literally tell you that in order to make money available to banks, they mark up the balance sheet by using keystrokes on the computer. That's literally what they say. So what's happening in a nutshell is now where the pendulum is swung back the other way now, where this quantitative easing, or QE, is now in effect, where financial conditions are now more loose, meaning the Fed has opened the door and said any bank in the system in the US that has or is currently unable to make depositors whole can come and take money. There's some rules you have to follow, some paperwork to fill out, some things. I don't know if you sell your soul to Satan or whatever, you have to give up a child or something like that. But the point is the money is now flowing. Money that wasn't in the system before is now literally flowing into the system. So the number of dollars in the supply is going up, and the purchasing power of all the existing dollars is going to go down, because it's simple math, and that's just how money works. When there's less of it available, things go a certain way. When there's more of it available, and what people are afraid of, I think, and depending on who you are, where you are in life, whether or not you hold assets, or you hold cash, or you hold nothing, the reality is that some people are afraid now, and I thought about this myself, is what some people are afraid of is that now that the money faucet has been turned back on and more supplies come, more liquidity, more dollars are flowing into the system now, is that it's going to cause things like housing to keep going back up. It's going to cause asset prices like stocks to keep going up, because the cost, if interest rates stop where they are now and it doesn't get any more expensive to borrow money, and then let's say that, I mean, this is purely hypothetical and speculative, 100%, is imagine if not this meeting this month on the 22nd, but the next time the Fed announces the rate policy, imagine if they were to cut rates, the reaction would be, risk on, let's borrow some cash and go and speculate across all these different types of things. And that's one of the things that people are afraid of. Some people see it as an opportunity, but other people don't. And if you don't have means to be able to go out and speculate, then you don't care. And in fact, it would be infuriating, perhaps. I don't know for sure, but it also means that wages probably won't go up like they need to. The cost of housing is going to continue to go higher. Inflation will be higher, perhaps, and the wealth gap, or whatever the difference between like the ultra wealthy and the middle class, will keep getting wider and wider. And that, unfortunately, when you hear people talk about like, well, that's how the fiat systems work, or how the fiat system works, is that you can't not add money to the system. And that's what,
yeah, I mean, it's interesting because essentially right now, then what the question I ask myself is, what is the incentive then for banks to practice good behavior, right, in risk management, if there's a backstop that's always there? Okay, and like, you know, if an individual bank screws up, the bank and its equity shareholders might go down. But what they're saying is essentially that depositors will be guaranteed. So what's actually happening here? Does the Fed care about the banks at all? Are they trying to, you know, consolidate power to the top 4 banks, right? Like, and then that's a way for them to control money flows into and out of the system, as well as implement, you know, potential CBDC. I mean, there's a lot of speculation as to what's actually happening here. And I think for the normal person, you know, if you don't have $250,000 or more in your bank, it sounds like things are fine right now, right? And so the people that are really worried are the people that have a few $1,000,000 and they're saying, you know, well, I need to shuffle this around a bunch of different banks. Which banks are going to be solvent? And I think that's where people are starting to get really worried. But I don't think the normal person at this point has anything to worry about, other than the fact that you're starting to see this happen. And what you might consider doing, like we talk about, is, you know, eliminating some of that counterparty risk you have with the bank and using a tool like Bitcoin to store some of that wealth. But again, it's an individual decision, and you got to kind of play it by ear. It's just really interesting to see all this play out at this time. When you remember a week ago, they were talking about potentially raising interest rates 50 basis points, and now, Goldman's came out and said they don't think they're going to raise it all. And you've got actually people, like you mentioned earlier, calling for as much as 200 basis points rate cut. And what a quick change this all has been. I mean, did the Federal Reserve do its job? Did they find, what they wanted to break? Did they break what they want, or are they still going to keep going? And that's the question that, right now, the crypto markets look at this as a positive thing. I would caution anybody considering, that's just starting out, to take it slow, not FOMO in. Don't empty your whole bank account into Bitcoin. Just don't do it. It's not smart. There's no need to do it. You're going to have time. These things take a while to play out. Bitcoin could pop today and be down 10, 20% tomorrow. The move here is to slowly over time, dollar cost average into, a position that you're comfortable with. And it's important, like we talk about, to control your emotions with this kind of stuff, because, even if Bitcoin goes up to 30K, look, you still got a long road to plow. This is a 4-year cycle, and I'll argue that it is a 4-year cycle till it's not. But, there's a lot of headwinds that still face these markets. And just because, 2 or 3 banks failed doesn't mean the rest of the banking system is going down. It doesn't mean that Bitcoin's going to $250,000 tomorrow. Just exercise some thoughtfulness and caution when you kind of analyze some of this stuff. I would look at it through the lens of, a capital, allocator, right? I've got to put X amount in this bucket, X amount in this bucket, X amount in this bucket. I would contend that crypto and Bitcoin is a new asset class and a new bucket that you should allocate a certain percentage to, but don't go crazy here, especially on news events and, when everybody's all fired up and running around like chickens with their heads cut off. Like, look, this is stuff we saw coming. It happened. I think the majority of the blame for this is on the Fed and their hiking rates so fast. I don't think it's to be blamed on companies that had deposits in these banks that were building crypto products. I think it's silly to make the connection. You might as well say that, these Apple app stores, Apple apps are responsible for the banking collapse. Like, right? It's the same concept. They're picking something out there that they don't like and trying to pin it on these banks collapse. And one of these banks, I don't even know that it deserved to be shut down, quite frankly. And I don't have enough information to speak intelligently about it. But I mean, it certainly seems like, I've got a tweet pulled up that Signature Bank Board member and former Congressman Barry Frank says regulators wanted to send a very strong anti-crypto message in shutting down the bank. There was no insolvency based on the fundamentals. That to me is interesting. That signals that there's something larger at play. I don't know what the end game is. Every time you have these financial crises, it seems like power always consolidates up. After the 2008 banking crisis, there was, let's say 30,000 banks. After that, there was 8,000. And I think after this, you might have 500 or something like that. But like, that's the scary part in analyzing all this stuff is you have to try to figure out where you think the powers that be or the market is taking all this stuff. And it certainly looks like it's a consolidation of banking power up to these banks that can be controlled that are, quasi government, facilities.
Yeah, the really big, too big to fail banks. So this concept of too big to fail is, we'll get into that, or I'll get into that in just a second. But like, let's make an analogy here. Like, if I started a hardware store and I had some investors, say I had 3 investors and they each gave me $100,000, and I ran this hardware store and I was selling hardware products to the consuming public, like farmers and homeowners and anybody else off the street that wanted to come and spend money at my store. And let's say that I made some really bad decisions, not just around how I ran the business. Let's say that I bought inventory and then sold it at a loss. For example, let's say for every screwdriver that I sold, I paid $1 for and I sold it for 90 cents. That would be terrible. Okay. The investors might yell and scream at me and be like, Ted, you're an idiot. What are you doing? So as a private enterprise, though, there's no government agency. Like is going to come and knock on the door and be like, Ted, we noticed you were selling your inventory for less than you paid for it. You know that you're not going to be able to do this for very long. You might want to consider charging $1.10 for that dollar hammer that you buy from the wholesaler at $1 and sell it for $1.10 and make 10% on that sale. You might want to consider doing that. That doesn't happen. You could now take and so eventually the hardware store would go out of business because the market, the people, the customers who were buying those products, they weren't being charged enough because that was a bad business decision. It wasn't the customer's fault. They probably show up and be like, hey, I need another box of screws or another hammer. But these clowns went out of business. What the heck happened? They're scratching their head going, what the heck happened? I guess I got to go shop at the competitor now because they're still in business. Okay, so that's one example of how the government doesn't interfere. Or the regulators and other people, the watchdogs that are the industry watchdogs, weren't knocking on the door, watching what's happening and then getting upset about it and doing any sort of weird enforcement actions or anything like that, Gensler. So now let's go to my business is now a bank. My inventory is my customers' deposits. I'm a private bank, but I'm operating in a privately owned bank. I follow federal regulation. I filled out all the paperwork. I did all the stuff and things, but I'm operating fractional reserve. I've got a bunch of people who have made deposits into my bank, but I'm going to go now and I'm going to make, as a business, I'm going to make some really poor investment decisions, and I'm going to lose all that money, and then I'm going to have to go running to the Fed and say, I can't meet my depositors' I can't meet the obligations of the people that had deposited money, and they're all asking for their money back now. So I can get bailed out in that sense, but I should be able to go out of business, or I should be forced to go out of business if I can't operate effectively and cut a profit and stay solvent. So if a bank does that and they go out of business because they're not solvent, where are the regulators though? Where's the government coming in to protect people? In this case, what we're seeing now with these three banks, the three that we know about, they're individual banks. Well, two of the three, not Signature. Signature's telling us that they were operating effectively and were profitable, perhaps, or at least break even, but they still got shut down. So now the government is now taking a step to shut down this one bank because of the missteps of the other. So the other two allegedly made some very poor decisions how they were running their business in the marketplace. And to protect, because of the nature of their business now, the regulators are now stepping in. But one question that I'm scratching my head around is, where was all of the enforcement and regulatory apparatus for the last year? What were they doing? And why is this happening in such an emergency? The Fed has to have an emergency meeting because they're just now learning about this, even though financial institutions like banks are regulated up to their ears in paperwork, process, procedure, regulatory compliance, and all of the other laws and rules and other things that effectively prevent most people from even considering opening a business as a bank. So these are not the too big to fail banks. So that's like most of the little banks in the world are in this country. Then you have the other end of the spectrum. You have the big dogs, like the JP Morgan, the JPMs, and the Bank of Americas, and the Wells Fargo. Their banking operation is just one division or one business unit among several others. And normally these would be individual separate companies that were operating in the marketplace. They may serve the same type of customer or even the same customer across all of those divisions, but they're one giant business. And let's say, and what we saw happen in the financial crisis when the housing market disintegrated is some of the banks didn't fail because even though their mortgage units lost billions of dollars, their other businesses kept them afloat. And so they literally were too big. Their business operation was quote unquote too big to then be considered failed because they didn't operate effectively. And just because that one division was technically insolvent, it didn't make the entire business insolvent or go out of business. So there's criticism for these too big to fails. There's praise for the too big to fails because they give the impression that there's safety and stability. And I mean, I don't know. There's different opinions about like whether or not it should be allowed. Because when the government steps in and tries to break up the big companies, like they did many decades ago with the telecom companies, they broke the big ones into little ones because they said it was bad for the consumer because there was no competition. Was that the right move? I don't know. I wasn't paying attention.
I think what's interesting about all this is that for the past year we've been hearing how risky crypto was, and then out of nowhere seemingly nowhere you have three big banks fail, right? And so to your point about where were the regulators? Well, look, like you can regulate everything to the point where it doesn't make sense to do anything, but it's not going to stop people from making bad business decisions, right? And that's the thing that is really frustrating as somebody who's in the crypto industry watching all this transpire is like, look, we understand that not every business is going to make it, not every crypto project is going to make it, and that's okay. We're willing to take that risk, right? But like, you can't come in and just arbitrarily shut out an entire industry because you quote unquote don't like it. Like, the risk isn't necessarily in any particular one crypto project. I mean, there's equal amounts of risk apparently if you are banking with one of these big banks, right? And so I find that a little bit interesting, right, to say the least. And I wanted to highlight something too while we're talking about all these things. In my opinion, what crypto needs to do is continue to build, continue to march forward. And I've got a tweet pulled up from Eric Voorhees, and he says, Bitcoiners, pay attention. Non-custodial, decentralized, native Bitcoin-backed loans. Block Explorer transactions below. And what they're using is a protocol called Thorchain, which allows individuals to swap Bitcoin and Ethereum, or Bitcoin and Litecoin, and a bunch of other assets in a decentralized manner, one-to-one. Right? You can swap Bitcoin for Ethereum or Ethereum for Litecoin. Any of these assets you can swap on a decentralized platform. And the point I'm trying to make is that, if the government wants to shut down the on and off ramps to crypto, ultimately, I don't know that it really matters because there's already crypto applications and protocols that exist today that allow us to trade these assets in a decentralized manner. And that's what's so powerful about all this stuff is that, it gives the individual the ability to control their own wealth and control their own assets and not be reliant on a third party that may or may not be engaging in silly business practices with your money, right? And so this isn't an anti-bank thing. This isn't an anti-government thing. This is, I believe I know better what I can do with my money than a third party, okay? And that's what's really important about this, Do you believe you can handle your money better than the government? And I think the overwhelming answer to that question is yes. Okay, and so now these protocols exist that allow you to do that, and I think you're getting a lot of pushback from the powers that be because they don't like that, right? That they like being in control of your money. That's something that they've had a monopoly over for hundreds of thousands or hundreds and thousands, even years. Right? This is something very new, and of course we're going to get some pushback, but there's risk in everything you do, and you have to, like we always talk about, manage your counterparty risk in anything you're doing. And that means if you have $1 million, you got to put it across 4 banks if you want it FDIC insured. And I think it's good that they stepped in and backstopped it because you don't want people going crazy and you don't want lines at banks. That's a bad thing. That's a very bad thing. So the normal individual, and I'll say it again, as of now, they've basically said anything, your deposits are insured, right? And so, again, I'm not a banking expert. I'm not a financial expert. Neither is Ted. We're just two guys talking about what we see going on and offering our opinions. So don't take anything we say as financial advice or anything like that. But we're just pontificating on what we see happening and trying to give a view through the lens of people that have been involved in crypto for a long time. And I think it's really powerful to see this kind of activity happening in the midst of major U.S. banks failing, right? People are, and that's what our job is too. We want to help as many people as we can onboard to this system that, in my opinion, the way I think this should go down over the next 10, 20, 30 years is a parallel system being built alongside the traditional banking system that will allow the United States to continue to be, a monetary superpower in the world, right? And instead, what they're trying to do, it looks like, is attack the industry instead of embrace it. And, I just don't think that's a good move because administrations change. I think there's a hell of an opportunity for, the banking sector to step up and embrace some of these companies that are building on crypto because the world changes fast and crypto isn't going anywhere. And the adoption rate for crypto is only going up. So if I'm a bank, I'm looking at this going, this is a temporary, headwind in a long-term secular trend. I'm going to take advantage of this and position myself as a crypto-friendly bank, even though I'm going to catch some stuff from potentially regulators in the government. I don't care because I know long-term. Now, unfortunately, does anybody have the balls in the United States to do that? No, I don't know. We'll see. But it's a global game. And so you're going to start seeing places like Dubai open their arms and say, come on over, boys and girls, we're open for business. Not only do we want you here, we'll give you incentives to come here and build the future of finance from our jurisdiction. And so it's really sad from a point of an American United States citizen who's extremely patriotic, loves his country, to see this sort of what looks like an attack on this industry play out.
Yeah, it is. It is sad that it feels like an attack, and I imagine that, this underlying feeling I have is that the words that politicians use to, like, and not just today but any day of the year, is they're telling their constituents what they think they want to hear, and I'm just, it took, imagine what it's like. You get elected and you're trying to please you're trying to please the majority of the people that support that voted for you. You're never going to please everyone, but the point I'm trying to get to is that it's still very difficult today for politicians because of the way politics works, is that your talk track is dictated to you in a certain sense based on who your donors are and what they want, and politicians are just the mouthpiece. They still today, unfortunately, go to the highest bidder. That's just real life. I'm not even criticizing the system necessarily. I'm just pointing it out. It's like saying that the sun rises in the east. So what I'm trying to get at is that I don't know what has to change necessarily in the short term for people or for politicians to be able to turn around and start mirroring back this the crypto in the industry, and Bitcoin is not the enemy. We've seen Senator Loomis and other individual senators and other Congress peoples start to talk openly about this, about Bitcoin especially, but also the technological innovations that are found in many crypto projects. The point I'm getting to is that we're still not there yet where people are going to start to embrace, and I just have to say it, is that the existing financial system or existing participants in the banking business, they're not going to embrace this stuff until they figure out how it's not a threat to their revenue. And until they do, they're never going to publicly talk about the benefits of having Bitcoin as a store of value asset, that it doesn't live in their institution. Because the business of banking is not just, and this is where a lot of people get this wrong. I got it wrong for a long time. I used to think, I just take my cash to the bank and they literally sit there and stare at it and keep it safe for me. Okay. The business of banking is to take the inventory that you provide as a depositor, and then they find other ways to put it to work and make money. And there's a menu, a laundry list of things that banks do to generate revenue for themselves, because they figured this out. They can charge fees to They can charge your balance fell below $100 fee for that. But if your money is not at the bank and it's sitting in Bitcoin on the Bitcoin blockchain, how's the bank going to make revenue from that? Nobody's figured that out yet, or nobody at the bank has brought a solution to, like, I'll pick on Jamie Dimon. Nobody's come to the Jamie Dimons of the world or the Brian Moynahans of the world and drop down on the desk and be like, I found a way for this crypto thing to make us wealthy beyond our wildest dreams and to grow our business.
Well, to me, that's simple. I mean, the bank can custody Bitcoin for high net worth individuals at 3 or 4%, and then use Fidelity to custody it at 2%, right? Like if they wanted to do it, right? Because a lot of the issues right now with onboarding people in the crypto is a learning curve. Most people don't want to be responsible for holding their own assets, right? And so you have these custody solutions that are being built, right? But truly, if I'm a regional bank right now staring at what's going on at the federal level, one thing I might do is I might say, you know what, maybe owning Bitcoin on our balance sheet isn't a bad idea, right? I'm not a bank. I don't understand how they think, but let's just say a traditional business, or let's just take a normal person, right? Like Bitcoin is neither positive or negative, right? Bitcoin is a tool that you can use to measure counterparty risk against the traditional finance system, right? You can speculate it on if you want. I mean, let's be honest, that's why most people are in the space. There's a limited supply. The adoption is growing. There's not as much Bitcoin to go around. It's going to continue to get, less supply available. So speculation is one thing, but you can use this tool to kind of help you navigate some of these strange times, right? And business can do that, banks can do it. Anybody that chooses to participate in the network can. And that's something that, is really powerful about it, and why it provides such a valid and unique solution to the current system. Because if you wanted to do that today inside of the traditional system, how would you do that? Right? Like, how would you measure some of this counterparty risk? Well, you'd have to spread your money across multiple banks. Well, if you get into a system where there's a systematic failure, it's not going to matter, right? Your money's still in the system. And so, it's a two-edged sword, right? Because while it provides individuals and businesses with the opportunity to exit some of that traditional finance risk, it also, I guess, limits the amount of control that the federal government or these banks have over individuals participating in the system too. And then maybe that's why you see some of these kind of quote unquote attacks on the system.
Yeah, I think interesting point about smaller banks and then other types of business looking to do basically the thing that Michael Saylor and MicroStrategy have tried to do, where they instead of having their cash, being eaten away at, and having the people on Wall Street laugh at them saying, we're discounting your cash on your balance sheet by 10% because if you're not investing in the S&P 500, then you're not at least keeping up with the market, and you're not keeping up with inflation and things like you're falling behind. And the point I'm trying to the thought that I'm trying to express here is that it's not like people, especially at the smaller business level, they don't think like investors. They think like business operators. And I think there's an opportunity where people who own businesses think less about, or not think less about, that's not the right way to say it. They split off another vertical or another thread in their thinking about how they run their business, and to allocating to Bitcoin to stave off some of the counterparty risk that comes with holding so much cash, operating cash that you need. Some of it, maybe there's a way to vector some of that into this other asset class, this new asset class called Bitcoin, that it takes it and articulated as, or they can be perceived to bring the benefit of you're hedging some systemic risk, that if the banking system itself which we're seeing now. There's a bunch of stress. Your risk, your downside is limited there. The ability to use Bitcoin as collateral to keep as emergency, or perhaps as a backstop of your own, to where you can use it as collateral to get funding to help keep things going if you experience change or you want to expand or whatever, without taking on different types of debt that can later come back to bite you. And a lot of companies take on all kinds of debt, and when the first time they have a cash flow problem, they're unable to service their debt, and things like that.
This is why Bitcoin exists, right? We shouldn't be having this conversation in a system that is healthy and robust. People running companies shouldn't be spending most of their time making sure their money disappears, right? That's the inherent problem, right? That's what we're facing right now, and this is why Bitcoin exists, because we've got now a situation. Forget how we got here, but now people are going to question. I'm running a business. I'm doing a startup. Is the money that I'm making safe in the bank? And that's not Josh saying that. That's not Ted saying that. That's the market saying that. And that's the federal government seizing these banks saying that. And you've got a real problem, right? And so the opportunity you talked about is, going to develop in some form or fashion. And I'm confident that Bitcoin as well as crypto will provide a solution to this, right? And that's what we're doing here. That's what we're investing in. That's what we're building. Wouldn't it be great if you ran a business and all of that was just taken care of for you? It was all done. You never had to worry about that, right? Like that's how it should be, right? And so whoever comes up with that solution, whether it be traditional finance or crypto, right? There's a huge opportunity there. And again, I think there's a huge opportunity for banks to step in that are willing to take a little bit of political risk and say, we support this industry, we support innovators, we support entrepreneurs. We want to see this option, and we'll grow with it, as opposed to try to fight it and stop, because you're just going to end up like Netflix and Blockbuster, right? Like, Netflix did a better job, but Blockbuster, Kodak, all these companies that failed to embrace, the overwhelming evidence that the world was changing, all are now irrelevant, right? And so you hope that doesn't become true for regional and commercial banks, right? That's not something that we want to see happen. And so a way to maybe kind of prevent that from happening is to educate them on, the benefits of this and how it can benefit their customers. And God, if I was able to call my bank and, trade crypto, I wouldn't be so frustrated sometimes, right? Like, why is it that every time you try to do something, you're looked at as a criminal when all you're doing is trying to protect and grow your wealth, right? Like in a new, asset bucket in technology. I mean, I don't understand what the problem with that is, I guess.
Yeah, there's still a lot of political risk that exists today. What I will say, though, is that out of the ashes of these, or what I'm hopeful comes out of the ashes of these types of events, is a new level of awareness across all walks of life, all political affiliations, all levels of business and operational, all levels of economic participation, and understand where we are in the election cycle. And if this stuff really matters to you, then you're powerless to change certain things. But what we still have today is you can still vote, and you gotta, this is a point that I really wish I could really drill into some people. There's certain types that just think that voting doesn't matter. And there's different levels of voting. There's national, state, and local, and literally your local town or county government. But the point I'm trying to get to here is that when this becomes a political issue that is a line item at the that will make or break the candidacies of different participants at the politician level, then these become like issues of the day. And you see this happening, and you see people taking this to Washington and taking it to the different state governments and trying to make it an issue that becomes a part. it's the beginnings of a policy framework that needs to be developed, and this needs to become a political issue in such a way that politicians are advocating for it, because it's not the enemy, and the benefits
It's
are.
correct. That's a great point. Bitcoin and crypto are not the enemy. Freedom and prosperity, they're the actual enablers of it, right? And so at a certain point, like I write my senators, I try to get involved, and you don't have to be, some sort of market expert, just tell them, look, I am investing in Bitcoin. I think it's a powerful technology. I think the state should embrace it, and I'd appreciate it if you get behind it, right? And just let them know that their constituents are involved in this industry. They pay taxes in their jurisdictions. They are advocates. There's very few things in this world, in this life, that people will get on their computer and write their senator about. Their money's one of them, right? Okay, and so if these senators in all these states know that there's a large percentage of their constituents that are interested in this space, that are working in this space, investing in this space, they're going to be more than likely, to not instantly grab at some shady backdoor lobbying bank deal that wants to suppress, technological innovation, so the banks can milk out, an extra year or two of, deposits, and I don't know, I'm just pontificating here, but it just certainly seems to me that is one thing that individuals can do, is just let your senators know that, hey, look, I'm watching you. I watch what you say about this topic. It impacts my livelihood. It impacts the livelihood of a lot of people around me. Don't arbitrarily blow this off thinking that it's not going to have any political consequence, because it will, right? This technology is inevitable. It's decentralized. It's happening. It's happened. The cat's out of the bag. Embrace it, guys. That's the move. And I think you're going to start seeing that. I think it'll show up in weird places, but I think you're going to start seeing members of the political parties that are savvy, that kind of listen to what's going on, and you're right, there's an election coming up, and this stuff is going to be on the agenda, and we'll have to see where it goes from here. But for the normal person, look, like we talked about earlier, I wouldn't get too hopped up over this stuff yet. We're Bitcoin advocates because we see the potential like this, what happened to Silicon Valley Bank, Silvergate, and Signature, and we look at that and say, okay, I'm going to be in control of a certain percentage of my money, even if it means having to deal with crazy volatility. I want to know for sure that this money is where I say it is, right? That it's not being lent out or taking crazy risk, or but that's what we talk about all the time in managing counterparty risk. And probably a good place to wrap it up. Ted, do you have any more thoughts?
I was just going to say, where we've come full circle talking about counterparty risk and things to be aware of. And the real risk is that when you take your money to a bank, if that bank is taking outsized risk and doesn't have the proper backstops in place, the proper reserve matching facilities, or whatever those things are called, then maybe you need to find a new bank. But not all banks are evil, and banking is not the enemy, just like crypto is not the enemy, just like Bitcoin and Ethereum and others aren't. They're not the enemy. They're technological innovations that people just fundamentally just don't understand still. The other thing, so that's one, counterparty risk. The other is if you can get on Facebook and spend 5 minutes commenting and liking and sharing and those things, you can take that same 5 minutes and find out who your representatives are, where you live, and they have a website. If they're smart, they probably wouldn't have gotten elected without one. Write them, use the contact form. There are people, it is their job to collect this information, and the issues of the day that the congressperson, the commissioners, the other elected representatives, the issues of the day come from the people that are the loudest. So be loud about this stuff. And I'm here in Florida. I'm going to do the same thing that Josh was saying, and they're going to hear from me. And people, The politicians get their agendas from their constituents. It's not the other way around. Like people say they want, people think, oh, politicians are going to lead us. But no. Like the tail wags the dog here, in my opinion. And we need to stand up for what we believe in. Just like everyone else has the same, like the people that are against this are exercising their right to free speech and their right to express their opinions. We need to do the same thing. So that's all I'm saying here is do some research. Find out how you think you can best manage your counterparty risk based on your situation, and then get in touch with and express your desires to your local representatives, at your state level representatives. And then remember, we got a presidential election coming up, and so I'm effectively screaming, "Get out the vote!"
Well, no, I thought you brought up a good point there too, and it's important to remember. Not everybody in Bitcoin and crypto thinks banks are the enemy. I certainly don't. Ted certainly doesn't. They're just a tool, right? To store your wealth, some of your wealth, to use for lending services, right? Like people that work in the majority of banks are very, very good people, right? You have some outlier situation where people make bad mistakes, and hopefully that's all this was, right? Like so most banks serve a purpose of lending to their customers, holding deposits, servicing loans. And that's a valid reason for banks to exist, and they do perform a great service, right? And so just like Bitcoin isn't your enemy, banks aren't your enemy. You want to do some due diligence with your banks. You want to make sure that they're making the right decisions to the best of your ability, which, Ted, if we would have talked about that a week ago, people would have looked at us like we were crazy, and I think I've probably said, hey, do you ever call your bank and ask them for their, assets and liability sheets, right? Like now, all of a sudden, people are going, well, that might make a little bit of sense. Right. And just as you do your due diligence on any investment, right, it's important to do the same with where you bank. And a lot of banks have built up great reputations over many years, and they've proven themselves not to make bad decisions with customer funds. So look, at the end of the day, banks still exist, and I still use banks. You still use banks. Everybody in this country uses banks. Right. And so I think it's important as we end this to kind of differentiate the fact that your local bank isn't probably making the same bad decisions as Silicon Valley Bank or Silvergate, right? These guys got caught in weird things. I mean, they were, Silicon Valley Bank was ESG to the max, super woke, and we're starting to see that doesn't necessarily make sense in business, right? Businesses should focus on making money for their customers and for their investors, and providing products for their customers that they want, not advocating political ideas, right? And so,
Right.
maybe the silver lining of this is you're starting to see some of this craziness kind of come to fruition, and businesses need to get back to running how businesses should run, not on political agendas.
Hallelujah.
All right, brother. Great stream. We will see you guys tomorrow. As always, not financial advice. Ted and I'm a crypto enthusiast, blogger, investor full-time. Ted works for a Bitcoin Lightning company, does consulting. We're just two guys that literally are giving our opinions. So hope you found it useful, but don't take anything we say, quote unquote, to the bank.